Hey, what's up, my friend? So in today's video, you will learn the secret to reading candlestick charts. So whenever you look up about candlestick charts, it seems that it's always stuff like, the hammer candlestick pattern, the shooting star, the doji, the engulfing pattern, yada yada, right? So those are, I would say, pretty elementary stuff. And today we are going to take things a step further, because in today's video, you'll discover, right, candlestick charts in a way that you might not have, seen it before. So number one, we're going to talk about, how to identify, right, hidden strength and weakness in the markets. You also learn how to tell whether a trend, it's making a normal pullback or it's about to make a reversal. Then we'll talk about how to use candlestick charts to predict market turning points. We'll talk about how to know whether you should be buying, selling, or staying out of the markets. So all this and more in today's video. But first, alright, here's what I want you to do, right? Hit the thumbs up button and subscribe to my YouTube channel. The link is all below, just click on it. This way, whenever I publish a new video, you'll always be updated. Sounds good? Then let's get started. So the first thing that I want to talk about is what I call a trending move, right? So these are basic concepts that you should know. So I'm not sure if all of you understand these concepts, and to make sure we are all on the same page, I just want to, walk you through these concepts before we get into the more advanced and exciting stuff later on. So first thing is a trending move. So what is a trending move? So you can think of a trending move as a move in the market, right, where the candles are trading in the direction of the trend. And this type of candles, right, are usually larger than usual. So let me just walk you through what is a trending move. So if you look at this market of gold, you can see that over here, this is a trending move. This is a trending move. This is a trending move. Okay, you can see that, notice the range of these candles, right, are larger than usual, right? This is what we call a trending move. So here's another example, just to make my point. Dollar yen. You can see that dollar yen, again, we have the trending move. Can you spot it? A trending move lower, another trending move lower, a trending move lower. So you can see that trending move, generally they trade in the direction of the trend, and the range of their candles are larger than usual. This is important, right? Because later on, as you'll see, when you start to notice that the trending move, the range of the candles are getting smaller, that is one of the clues that the market is, making some significant changes underneath, right? We'll get to that part later, but for now, just understand what is a trending move. Now, moving on, the other aspect that I want you to know is what I call the retracement move. So the retracement move is just the opposite of a trending move. It's usually small range candles that trade against the direction of the trend. That's why we call it a retracement. This is what I call a retracement move. And I'll share with you some examples later on, but for now, I want you to pay attention, right? Whenever you look at the charts and you notice that the retracement move, right, has a large range candle, that is a signal to you that the market, right, is about to undergo some major changes. Okay, and usually what happens is that the current market structure is likely to change after a large range retracement move, right? What usually follows is that the market will go into a range followed by a breakout. So confusing, don't worry. Let me just walk you through a few examples and you'll see my point. So for now, let's have a look at the retracement move. Okay, retracement move. Let's see if I can find it. Here. Okay, so you can see that on the pound yen, this is a retracement move. Right, we have this trending move lower, a retracement move, a trending move, a retracement move. So if you pay attention to the retracement move, okay, I don't want to highlight it, right? This portion here and this portion here. You notice that the range of the candles, they are smaller, right? Smaller than the trending move. So when you see such retracement move, it tells you that, the trend is healthy, that, the pullback is just a normal pullback and the market is likely to continue lower. Okay, so this is one example. Let's see if I can find another. Okay, you can see here on gold. Okay, gold, you can see that over here, a trending move. Then we got a retracement move, another trending move. Then right now it seems to be forming another retracement move. So pay attention to the retracement candles is smaller than usual. So now I want to share with you a few advanced things, right? So when you pay attention to retracement move, right, normal times in a healthy retracement move, the range of the candles are usually small. But what happens when the range of the candles get exceedingly large? right? Recall I said that when this happens, right, it's a signal to you that the market structure has changed. And let me walk you through what I mean by that. So if you look at the S&P 500, okay, so you can see over here, all along the market, right, seems to be in a healthy trend. Okay, a trending move, retracement, trending, retracement, a trending move. But at this point over here, notice the range of the retracement move got exceedingly large. This one over here. You know that by right, in a healthy trend, the retracement move shouldn't be very large. It should be quite small. But in this case, it's very large. It exceeds, right, the realm of normality. So this should signal to you that the underlying market structure is likely to change. So what do I mean by that? So if you look at this underlying market structure, you'll notice that I would say it's somewhat, okay, I think the 20 MA, right? It somewhat respects the 20 MA, right? You know, had a nice bounce a few times. And when this happens, it breaks below the 20 MA. It had a very large retracement candle. It's telling you that this nice uptrend is about to come to an end, right? This nice strong uptrend is about to come to an end. I'm not saying that the long-term trend will be over, but I'm saying that, you know, this current, you know, nice swing up and swing down, right? Probably that market structure is about to come to an end. And if you recall the slides, I mentioned that what usually happens is that the market goes into a range followed by a breakout. So when you see a large retracement candle against the underlying trend, it tells you that the market is likely to go into a range. So in this case, you see that on this market, right, the market went into somewhat of a range, right, between these highs and these lows over here, or even a descending triangle, if you want to call it. So you can see that the market went into a range, and then finally it broke out and continued higher. So you can see that what happened is that when the market made a large retracement move against the underlying trend or market structure, you should expect that, you know, whatever has happened, whatever type of trend that has, you know, existed earlier, probably is coming to an end, and the market would move into a range. Okay, so this is what happened. So here's another example. Okay, so let me just share with you what else. Palladium. Okay, let's see. So same thing for palladium, right? Notice that again over here, this market here, pretty nice, you know, healthy trend, right? Trending move, retracement, trending, retracement, trending, then boom, over here, this candle, this retracement move, is larger than usual. It does not behave like a normal retracement candle, and that should signal to you a sign, right, that this earlier trend, right, the easy money of, you know, buying the dips, probably it's over, right? The market is likely to go into a range and then break out of it later on. So you can see that what happened is that the market went into a range, and right now it's going to retest the high. So it formed this pretty much this somewhat of this range over here, I think, between these highs and these lows. So now it's about to retest the highs. Whether it can hold or break, right, it's anyone's guess. But the key thing that I'm trying to bring across here is to pay attention, right, to that first retracement candle that is way out of normality. That is important. Okay, so have a look at one more example before we move on to the next concept. Dollar against the Turkish lira. So you can see that here again, same thing. Okay, so this market is quite interesting. You can see that, notice, it got really bullish, right? Just normal, you know, trending retracement move. Then goes up over here, gets parabolic. And when you look at the retracement move, man, you know something is wrong. Something is brewing. Okay, because the size of the retracement move is as large as the parabolic swing upside. So this, what does this tell you? Well, Rayner says that when you notice the retracement move getting larger than normal, it's a sign that the underlying market structure has changed. So whatever easy money that, you know, has been going on, like, you know, buying the dips, averaging into your losers, because if you think about this, you can average into your losers in this type of trend and you'll still make money because, you know, the market is in a strong uptrend. But when you notice the retracement move gets large, way larger than usual, you know that easy money is over, right? So you will have to change your strategy, right? You should expect the market will go into a range and then followed by a breakout of the range. So in this case, the market went into a somewhat of a range, descending triangle kind of pattern. Then it broke down, then form another range, right? And then form another range over here. Okay, so you get my point. So moving on, right? Once you understand this concept of the retracement move, okay, and the alert of the large range retracement move, let's move on and talk about the break of structure. So all these concepts are important because we later on will be using these concepts, right, to identify, you know, healthy trend to trade and how to actually, you know, predict, right, when the market is about to make a reversal. So all these concepts will come together and make sense to you later on. Okay, but I want you to pay attention to the break of structure right now. So a break of structure is quite straightforward. So in an uptrend, right, consists of series of higher highs and higher lows. Higher highs, higher lows. So when you get a break of structure, it means that you now have a lower highs and lower lows. So in this case, right, it breaks this. Now you have a lower high and lower low. So this clearly has broke the structure of an uptrend. So this is what I mean by a break of structure, where the market structure has invalidated the previous trend. Okay, and likewise for a downtrend, a break of structure occurs when you get a higher high, okay, a higher high and a higher low. So now the downtrend break of structure occurs when you have a higher high and higher low. So once you've understood this concept, okay, we are going to understand, right, how to know when is the best time to trade the market. So first, let's talk about when to trade the trends, or how to know when the market is about to make a normal pullback or reversal, or rather how to trade the trend. Okay, so moving on, let's have a look at a few examples. So first one is gold. We talked about that earlier, but I just want to bring this back to point. So if you understand the three concepts that I spoke about earlier, number one, the trending move, retracement move, and break of structure, you can see that gold right now, okay, it's still in a healthy trend. You have a nice trending move, a normal retracement move, a trending move, and a potential normal retracement move over here. So this tells you that this trend is healthy, right? There's no signs of reversal or anything fishy going on behind the scenes. So if you want to trade this type of trading setup, what you can do is to look, right, to trade in the direction of the trend. So what I usually like to do is to see where the price is relative to the 20 period moving average, because if it's too far away, then the market chances are is somewhat of it overbought, okay, and the market could reverse further. So what I usually like to do is to let the 20 MA catch up higher, right, where the price is now near the 20 MA, and once it's there, I can look, right, to buy the breakout of these highs. Because if you recall, in an uptrend, it consists of higher highs and higher lows. So if this trend is healthy, and if this trend, right, is likely to continue, I could buy the break of these highs and then just have my stop loss, right, below this swing low. Because as we mentioned earlier, a trend is only invalidated when it has a break of structure, when it forms a lower highs and lower low. So let's say I buy the break of these highs. Okay, I buy the break of these highs. Let's say my stop loss is somewhere below this swing low, somewhere here. So now if the market heads up higher, okay, and it comes down lower and hits my stop loss at this point, chances are this market is invalidated. The trend is invalidated because now I have a lower low. And I even might have a lower high as well if the market comes down lower like this and then breaks. So now I have a lower low and lower high. And chances are this trend is invalidated. So can you see how these different principles are coming together to let you know what you should be doing in the markets, whether you should be buying, selling, or stay out of the markets. Okay, so this is one example for gold, right, in a healthy trend. Another example is this one here. The three things: trending move, retracement move, and break of structure. Trending move, retracement move, trending move, retracement move. So ask yourself, is there anything fishy about this underlying trend? Well, I don't see anything fishy about the trending move, right? It looks pretty healthy. Retracement move, nice and small, how it should be like. Break of structure has not happened yet. There's no break of structure. So if you ask me, there's a good chance that this trend is likely to continue. So what you can do is, again, to trade in the direction of the trend. You could short the breakdown of these lows and, have your stops, right, above this highs, 1 ATR above it. Okay, so you can see that if the market does break down lower and comes back up higher and break out, at this point, your trend is invalidated. Now you have a higher high and higher low. And if the trend is invalidated, you don't want to remain shorting the markets, right? Does it make sense? Okay. And let's see, right, one more example. Pound against the Swiss franc. Is that it? This one here. So you can see that pound against the Swiss franc, the same concept, right? Look at the trending move, the retracement move, and the break of structure. Trending move, retracement move, trending, retracement move, trending. Chances are we're going to get a retracement move if the range of the candles are small, then hey, you might want to consider taking a short trade on the break of these lows, okay, and then have your stops again, right, away from these highs. So if the market were to reach your stop loss, chances are the downtrend, right, has a break of structure and you don't want to stay in the trade any longer. So this is how you actually use the 3 concepts that I shared with you earlier to know when you should be trading with the trend or not. So one other bonus tip to share with you is that when you trade with the trend, you also want to pay attention to whether you're coming into any key market structure like support resistance. So in this case, you can see that the price is coming to a key area of a support. Over here, let me just zoom out. I think this is a key area of support. You might not want to be shorting into this key area of support. Okay, but I left that out because I don't want to confuse you. But this is an additional tip, right, that you want to consider whenever you are, trading breakouts, for example. Make sure you're not coming to any key market structure that could, go against your trade. Okay, so with that said, now let's move on into something else. Okay, we talked about how to trade with the trend. Now, how do you predict trend reversal? So in the earlier lesson, we talked about how to trade with the trend, right? How do you know that the trend is healthy and how you can, sort of safely trade with the trend. Now, we're going to talk about trend reversals. How do you know when the market is about to make a reversal so you don't, still try to, trade with the trend and then get caught on the wrong side of the move? So for this, right, again, we'll be looking at these 3 things: the trending move, the retracement move, and the break of structure. So in this case, when there's a trend reversal about to occur, right, you'll notice that the trending move, it gets smaller and smaller, right? It won't be as large as how it usually would be. Trending move gets smaller. Retracement move, it gets larger. Okay, so let me just put some arrow. Okay, trending move gets smaller. Retracement move gets higher, and the break of structure, right, you see that there is a break of structure. So if it's in a downtrend, you'll notice that the market goes into a range, or then afterwards it breaks out higher high and higher low. Okay, walk you through a few examples so you know what I mean. So let's have a look at I think Bitcoin is quite interesting, right? A lot of people following it. So let's analyze this. So Bitcoin, you can see that over here, massive sell down over here around the 6,600 level. Okay, so you can look at, again, we analyze it according to the 3 concepts that I've shared with you, right? A trending move, retracement move, trending move, retracement move. Then over here it went into a range. So let's analyze wave by wave. So look at this trending move, very nice and strong. Retracement move, relatively weak. Over here, this trending move, now it starts to show sign of weakness. The range of these candles, right, is actually much smaller compared to this wave over here, right? Notice the range of the candles getting smaller and smaller. At this point, it doesn't mean that the trend is about to reverse, but it's a sign. It's a signal to you that this market, right, the market structure underneath, right, something is changing. First clue. Second clue. If you look at the trend, the retracement move, okay, this over here, right, seems to be getting stronger, right? This retracement move is now actually for the first time stronger than this trending move over here, right? This retracement move, the candle's getting larger and larger compared to previously where it's relatively small over here and relatively small over here. So this again here, second clue. Third clue, right? The third clue is again, you can actually see, right, the trending move now got even weaker over here. Range of the candles getting smaller and smaller compared to this portion here and this portion here. Well, that's a signal, that's a sign, okay? And if you look at the retracement move now gaining momentum, right? Getting strength, right? Range of the candles getting larger and larger. So at this point, you essentially have a market, right, entering a potential accumulation stage. Or let's put it layman term, into a range. You can identify the range, the highs, and the lows over here. And you can tell yourself that, hey, this trend, clearly the market structure has changed. And if the market now were to break above these highs, you're going to get a break of structure. Higher highs and higher lows. And this is actually what happened on Bitcoin. Market broke out, okay, and pretty much never looked back. And you can see that, how all this reading of candlestick charts, right, would give you a strong clue that, you should be aware of this reversal coming. Okay? So, again, this is all the concepts that I've just shared with you, right? The trending move, the retracement move, and the break of structure. And if you actually notice this, right, at this point, right, you wouldn't try to be shorting Bitcoin anymore because you know that, underlying the market structure has changed. You shouldn't be shorting Bitcoin, right? Maybe if you didn't buy, fair enough, but at least you shouldn't be shorting Bitcoin. And also, right, as a bonus tip, right, notice that you have this series of higher lows coming into resistance, right? Otherwise known as a ascending triangle. This is a sign of strength, telling you that the buyers are willing to buy at these higher prices. Okay, so this is again, how you can use candlestick charts to predict, right? So-called quote-unquote predict market reversals. Let's have a look at another example. Let's see. Dollar against the Chinese yuan. Okay, I'm gonna talk about the same three concepts again. So if you look over here again, trending move, retracement move, and break of structure. Trending move, retracement move. So at this point, right, the retracement move, right, it's a signal already, because you notice that the range of the retracement move is pretty darn large. These two candles, compared to the previous ones over here, which is almost non-existent, and this one over here, right? This two is much larger, or even this one over here. This two sends you a signal that, hey, you know, something might happen, so keep a lookout for it, right? It's not confirmed yet, because the market does not have a break of structure, but this is a warning sign. Then subsequently, we look at the subsequent trending move and see how it fares. So when you look at the subsequent trending move, okay, I'll be honest, right, it looks like there is still strength. In fact, over here, when it broke down of this lows, when it broke down this two candles here, it looks like, you know, the market is about to head down lower. But then it did, right? It reversed up higher, and then it starts to consolidate. So at this point now, you have the range, once again, between these highs and these lows. Okay? So if you look at, again, the trending move, at this point, the trending move seems to be getting weak, because, again, the momentum, the range of the candles is getting smaller and smaller. And the retracement move is getting stronger and stronger. Retracement move, right, over here, it's getting stronger, right? Look at the range of this retracement move, getting stronger. So when does the break of structure occur? It occurs when the price breaks above this highs over here. At that point, right, you would have a break of structure, and we had this reversal over here. Okay, so again, this is how you actually use the three concepts, right, to predict, right, market turning points. And also, for those of you who are familiar with chart patterns, this looks somewhat like a cup and handle pattern, right? Notice that this is the handle. You have a nice tight build up, right, before the price breaks out. Okay, so again, you don't really have to memorize chart patterns if you can read, right, the price action of the markets. If you can read the candlestick charts, it's all down there. Okay, and let's have a look at another example. Brent crude oil. Okay, this one here. So you can see that this one again, same. I'm going to sound a bit, you know, naggy, right? Again, trending move, retracement move, trending move, retracement move, trending move. Boom! Very strong retracement move. This one over here, this retracement move is very strong. Look at the range of the candles. Again, doesn't mean that the trend is over, because at this point, there is still no break of structure yet. Then we look at the trending move over here, it got weak, right? This trending move, right? The range of the candles just got smaller and smaller compared to the earlier downswing. So this is what also I call a build up, right? A tight consolidation at this area of resistance. So at this point, if the market breaks above these highs, now you have a higher high and a higher low. You have a trending move that got weak. You have a retracement move that got stronger. This signals to you that probably this is the end of the down move and the market is about to head higher from here. Okay, so this is for Bitcoin, right? And this is for crude oil. So again, the move is not very large before it came down back lower. And one thing to point out is that, like all trading techniques out there, nothing is certain, right? We're just, you know, stacking the odds in our favor by reading the price chart, the candlestick charts, right? And then making high probability trading decisions. Okay, so with that said, let's do a quick recap. Okay, number one, you want to pay attention to trending move, retracement move, and the break of structure. This gives you clues, right, to whether the trend is healthy or not. If the trending move is healthy, the retracement move is healthy, and there's no break of structure, chances are the market is in a healthy trend and you can continue to trade in the direction of the trend. But when you notice the trending move getting weak, the retracement move, right, getting stronger, right, the range of the retracement move candles are getting larger, and you have a break of structure, chances are the trend is it's over and the market is about to reverse back in the opposite direction. And I have one bonus tip for you, right? If you want to predict trend reversals, right, you can stack the odds further in your favor, right? Especially when the price leans against higher time frame support resistance. What do I mean by that? Let me explain, right? So this is a bonus tip. So if you look at the dollar against the Chinese yuan, okay, one example, if you just zoom out, right, at this reversal over here, okay, one thing that I'm not sure if you realize is that it was actually leaning against a higher time frame support. If you just zoom out a little, so you can see it's leaning against this previous resistance, now act as support. Alright, so this area now becomes an area of support and a key market structure. And on top of it, right, you have the trending move, retracement move, and break of structure that I spoke about earlier. This really greatly increased the odds of the reversal. Another example, okay, which one is it? I think it was the Bitcoin one as well, right? If you look at Bitcoin again, the earlier reversal, okay, this portion here, if you just zoom out a little bit, you notice that this 3,000 level is actually an area of support, right? You look left, previous resistance, now act as support, and this now act as support again. And on top of it, right, we have this whole portion where we analyzed the price action earlier, telling you that the buyers are gaining strength. Okay, so this is how you can actually identify really high probability market reversals, right? The concepts that we spoke of earlier: trending move, retracement move, break of structure, plus the price leading against higher time frame support resistance. That really, right? It's powerful stuff, right? Go analyze the chart, study it, and you'll see what I mean. And just one more final example before we conclude off today's lesson. Another one is the euro against the Swiss franc. You can see that, you can even do this on, shorter term swing trading. So for example, the daily time frame of euro Swiss franc is at this area of support, right? The price, it's over here. When you can see that clearly this is an area of support on the daily time frame. When you go down to the 2-hour time frame, okay, you'll notice that this is the price action that you see here on the 2-hour time frame over here. And again, the concepts can be applied across different time frame. Let's analyze it one last time. Trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move, retracement move. So at this point, okay, something has changed, right? Trending move getting weak, right? Small range candles down, lower, relatively small compared to the earlier trending move. Retracement move now showing a little bit of sign of strength. Then a weak trending move, and now retracement move even stronger. So now at this point, the tide, right, is clearly, shifting from the sellers to the buyers. Okay, but one last thing that we are missing is the break of structure. So where is the key level where there will be a break of structure? If you ask me, this will be the level, right? This area of a resistance. So at this point, as you look through the charts, right, you notice that over here, we pretty much have a break of structure at this point when the market break out over here. So now you have a trending move that's getting weak, retracement move that's getting strong, and a break of structure. And on top of it, right, if you notice this, we have a build-up form just above this resistance. Again, telling you that, there are buyers willing to buy at this higher prices at resistance. And then, as they say, right, the rest is pretty much history. Okay, so obviously I have, cherry-picked all these charts, but I hope that the concepts, the lessons that I'm trying to bring across to you here today, right, it helps you in your own trading to know when you should be trading with the trend and when to, anticipate trend reversal. So just a quick recap. It's again, trending move we spoke about. Healthy times, trending move has a large range candle. When it's not so healthy, the trending move candles tends to get smaller. Retracement move, in healthy times, retracement moves, the candles, the range are small. In unhealthy times, right, the candles get larger and larger. A break of structure. Bonus tip is when, the price leans against a higher time frame support resistance. That really help you enhance, right, the odds of a trend reversal. Okay, so if you've enjoyed, right, this video here so far, hit the thumbs up button and subscribe to my YouTube channel. The link is all below. And if you want to take your candlestick charting knowledge to the next level, what you can do is go down to my website, tradingwithrainer.com. The link's over here. Okay, scroll down and download this book over here, The Ultimate Guide to Price Action Trading. Click this orange button and I'll send it to your email address for free. Okay, so with that said, I wish you good luck and good trading. Feedback, questions, let me know below and I'll do my best to help. So with that said, I will talk to you soon.